My name is Jeffrey Kennedy and welcome to Trader's Classroom. Recently I've received a number of emails requesting that I review my reverse Fibonacci technique. So that's exactly what we're going to be doing in today's episode. Simply put, a review of reverse Fibonacci. So let's begin. Now the diagram in front of us shows the basic type of Fibonacci relationships that we look for within an impulse wave. For example, the most common Fibonacci retracement for a second wave is a 618 multiple of wave 1. Wave 3 typically travels to a 1.618 multiple of wave 1. Wave 4, the most common Fibonacci retracement, is that where wave 4 equals or falls back to at or near where wave 382 multiple of wave 3. And then, of course, applying the guideline of wave equality within the context of impulse wave development. Most often we tend to see wave 5 travel the same distance as wave 1. Okay, this is idealized. Okay. Is it possible for wave 2 to exhibit a different retracement that of wave 1? Yes. We can actually see wave 2 go down to a 50% retracement, 618 retracement, or even a 786 retracement. On very, very rare occasions, I'll actually see wave 2 fall to a 382 retracement. Now, when that occurs, my first thought is that it will actually turn out to be a B wave, but if this subsequent move is very, very decisive, then we can actually identify that as a second wave. So whenever you have a very short wave 2, simply put, that would argue that there's so much underlying buying pressure, it would push the market immediately higher, or certainly in the days that follow. But simply put, that actually gives us 4 retracement levels to look for or watch whenever we're looking at trying to identify a support area for wave 2. Wave 3, this is ideal, but there are other multiples. For example, 2.0, 2.618, and also 4.236. Now the same retracement idea for wave 2 also applies for wave 4. If wave 4 is very time consuming, many times that retracement of wave 3 will be very shallow, 236, 382. Sometimes if this pullback here, this wave 4 unfolds as a zigzag or maybe even a double zigzag, then you might actually see something along the lines of 50% or even 618. And there are also a handful of relationships that are applicable to fifth wave development. In other words, there are literally dozens of different relationships, retracements and multiples and Fibonacci dividers that we can examine to identify high confidence, say resistance or targets, and or say support or retracements. Okay, now what exactly is Fibonacci? Reverse Fibonacci. This is a technique I developed back in the 2000 timeframe years ago, so it's probably been about 18 years ago now, and I find it to be very useful, very simple, and also very effective. Now, what's the logic and what exactly is going on when I say reverse Fibonacci? Well, I think this slide kind of explains it. What I would do in the case or what you see done whenever we're looking at a standard application of Fibonacci relationships, retracements, multiples, is we would use the length of wave 1, an impulse wave, as your multiplier for your second or your secondary impulse wave, wave 3. Okay, and whenever you come to wave 5, you're also utilizing, say, for example, the length of wave 1. So it's kind of like an apples to apples comparison. We're utilizing motive waves, looking at proportions between motive waves and subsequent motive waves. Okay, well, there's nothing wrong with that. But one idea I had a long time ago, and it actually stemmed from an auto accident I was in. Okay, let me explain. I was in just a minor fender bender with a huge truck, and I did not fare very well. I mean, I was fine, safe, no injuries, just a fender bender at an intersection. Okay, and this was years ago. Okay, well, the next day I had to go to that same intersection on my way to work. Well, the next day, trust me, when I got to that intersection, I was looking left and right and left and right and back again and left and right. I was so nervous at that intersection because the incident has just basically occurred the day before. And then I noticed over time, over, say, days, over weeks, over months. Then there were times where I would just go through that same intersection and not even think about the little fender bender I had weeks, months, or even years before. So in other words, the most recent price action is the most relevant price action. That's my thinking, because the more recent an event is, the more relevant the event is. And you know, if you get your heart broken today, tomorrow it actually sucks. But a year from now, you're probably on to a different relationship. That pain is gone. There's enough time, okay? So simply put, the idea stemmed from that auto accident, that the most recent price action is the most relevant price action. So with reverse Fibonacci, what I'm doing is I'm looking, rather than utilizing wave 1, I'm utilizing wave 2 as my multiplier for wave 3. And typically what I would do here is simply look at where either the 2.0 or the 3.0 reverse Fibonacci multiple of wave 2 to identify a third wave objective. For the fourth wave move or anticipation of a fifth wave top, I'll simply look at a 1.382 or a 2.0 reverse Fibonacci multiple of the fourth wave pullback. So what I'm doing is I'm taking the distance of wave 4 here and projecting it upward. So we measure wave 4 and then project it upward. So you can see here that so what we did was we took the length of wave 4, multiply it by 1.382, and that gives me an objective here of, say, 58.31. Beyond that, we look at the 2.0 multiple. Rarely will I actually need to rely on a 3.0 multiple. I would say I utilize that multiple, say, less than 10% of the time, because these two variables, these two numbers, 1.382 and 2.0, basically take care of most of my needs. This is another reason why I like this approach. It's simple. Rather than having to deal with, say, a dozen or more calculations utilizing the standard, say, Elliott-Fibonacci approach to wave development, I'm basically utilizing two variables here to identify in what I refer to as essentially trade targets. Where is this move going to travel to? So let me walk you through a couple of slides here to kind of just reinforce the whole idea. Now, what we have in front of us is a price chart of Seagate Technology, and what I'm looking to do, okay, we have this big decline, okay, this big decline. That's going to be my measuring thing. I view counter trend moves as periods of decay, and subsequent moves, these advances, as periods of growth. And as you know, part of the relevance of the Fibonacci sequence is it does govern or measure patterns of actual growth and decay. So again, makes sense, it's logical. Also too, if we're using 1 to calculate wave 3, then why don't we utilize 2 to calculate wave 4? Well, we don't. Again, just another thought there. Okay, so what we would simply do is we would take the length of this decline, the entirety of the decline, and that will give us an objective to shoot for the subsequent advance. Okay, one multiple, nice objective. Look at that, right there. Okay, let's look at another example. Okay, now, since we've already achieved essentially this target area, that was our growth phase, then we have the decline, okay? Then we have the correction. Now, if we want to, we can kind of get cute here and begin looking at some of the internal substructures here to identify the length of this pullback. So I would probably go to a smaller term time frame. But because we're working with a daily chart, let's just stick to what we're doing. So what I would want to do in this case here to identify the extent of the next advance is basically measure that move down and then project it upward from that low by 1.382. As you can see, that targets another very nice area to look for prices to shoot for. Right there. Okay, so this technique, again, very simply applied, allowed us to identify this as a high probability target for an advance, and then this. We can also move, again, to a smaller term time frame. So let's clean up this price chart here. Now, this price action here to the left in the yellow box that I'm about to draw, this price action right here, represents this price action that you see on the chart. Okay, I'm just working with a smaller term time frame. And so what we do, we take the entirety of the decline from high to low, from high to low, okay, there's low, multiply it by 1.382 and 2.0. Now look how nicely, again, we hit it just by a few pennies and then reversed. Now if we want to utilize that idea of clustering, identify a cluster of Fibonacci resistance or support, then we would simply take this multiple, project it upward. Now you see a very nice tight cluster of Fibonacci resistance. Again, and really in today's examples, all we're really looking at is the 1.382 multiple of prior swings. Also, too, another cool thing about this technique, you don't have to be a master Elliottician either. Where's the wave count here? Where's the wave count in this example? Where's the wave count in this example? They're not. All I'm doing is basically looking at these periods of decay, utilizing them as my basis for the Fibonacci calculation to anticipate the subsequent Fibonacci growth within the overall sequence of a move. But utilizing this technique, we basically caught this high within pennies, we caught this high within pennies, we also caught that high within pennies. What about the subsequent decline? Okay, well, let's take a look here. Okay, we go from that extreme to that low, boom, okay, like that, boom, right there, 2.0. Okay, so now where is Seagate likely headed? Well, I think we're in a period of decay. Again, I think the Elliott wave corrective patterns are essentially patterns of decay, and motive wave patterns are patterns of growth. Okay, so what we can actually do here to identify the next, say, significant area of resistance or upside target for Seagate would be to start off with that original decline. Remember the original decline that actually gave us this top in the market? Right here? Okay, well remember that was only a 1.382 multiple. We still have that 2.0 multiple at 6607. And then we have this decline, so we can actually utilize that decline. Remember the decline where it was a 2.0 multiple of the prior price move? Let me put that back on the chart. So from here to there, 2.0 multiple. Look how nice it came into play. So now we take that decline and project it upward. Now we don't have to stop there. We can actually be creative with this approach as long as we stay within the overall, say, theme of the approach. Okay. For example, we could actually utilize this decline to anticipate the next move to the upside. Again, the whole idea would be to create a Fibonacci cluster of resistance. Notice how nice and tight that area is developing to the upside. 6537, 6607, 6718. And then we can also use the most recent decline, that sell-off. Multiply it by 1.382 and 2.0. And again, notice how nice and tightly bound that cluster of resistance is actually doing. So what we're doing here is we're taking the periods of decay within the structure. And when I say periods of decay, all I'm talking about are corrective declines. Okay, now if the trend were down and we would see counter trend advances, those counter trend advances would actually be periods of decay as well, because the growth would be negative growth essentially. I hope I'm not confusing too many people here. But I just wanted to do a quick review and show you that it's a very simple technique. All I'm doing is utilizing prior swing highs, prior swing lows, or utilizing this measured move technique. And primarily the variables that I look for or employ are the 1.382 and the 2.0 multiple. So rather than having to deal with, say, a dozen or so Fibonacci calculations, all I do is one or two and it works for me. Hopefully it'll work for you as well. Now I do have some homework for you. And these are just some charts to look at. I may or may not touch on these next week, but for some reason or another, I thought that these were price charts worthwhile of further scrutiny. So, for example, take a look at BlackRock. Ticker symbol is BLK. I think we have some interesting things going on in BlackRock. So take a look at that. Sage Therapeutics, ticker symbol SAGE. Again, interesting price action here. Another one that we've talked about in the past in Traders Classroom, Regeneron Pharmaceuticals. Ticker symbol REGN. And then we have Aetna, AET. And then one more that I think is kind of interesting, Momo, M-O-M-O. Okay, guys, well, that about does it for me for today. Thank you very much as always, and I'll see you next week.